Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlan. Good to have you on board. Hi Aaron, Salvatore, UA, great to have you attending. Don't forget, during the session, we're going to have opportunity to let me know any trades ideas that you have. So if there's any trade setups you've got or any you want me to make any comments on any trades you're thinking of taking, just pop it in the question and answer panel and we'll get that at the end of the webinar, so we'll have time to look at it. Just as for other folks are coming in to the webinar, don't forget that the whole idea of this webinar is all about education. So really the key thing to grasp and the key aspect that I teach is that you want to pair a strong currency against a weak currency. You want currency pairs to be going in opposite directions to one another, and that's really fundamental to understanding the way that most professional traders trade and understanding directional moves in the FX markets. Now, obviously, it takes time, so the whole idea is that this workshop on this.
As we have gone through the top of the hour, shortly start of our usual 1 o'clock rundown.
Squawk. So apologies for that. And then when you practice that on these workshops, each day, if you try and get into practice thinking which is a strong currency pair, which is a weak currency pair, don't forget we've got a Telegram channel, HYCM, and each day I try to put up a strong and a weak currency pair. So, one way that you can use that is think, well, which currency pair did I think was strong and weak today? What has Giles said? And I'm not saying, oh gosh, because Giles is always chooses the best currency pair. That's not what I'm saying. But what I'm saying is that you can use myself as a test. So you can say, okay, why did Giles see that currency as strong? And maybe think, well, I did as well, so I can understand it. Or maybe I didn't. Perhaps there's something I can learn from. Or maybe you even realize, well, actually, I've got a better currency than Giles chose today. So all of that is just helpful because you know how that you sharpen each other, synergy, that kind of thing. So don't forget to make use of that HYCM channel that we have as well. In terms of the session that we have ahead, look in your handout session and you can see there's a workshop guide, November the 26th. It's underneath the handout session. If you just double click on that, then you will get a handout that looks like this. I'll just make this a little bit smaller. And you'll get a handout here. This handout I have thought about to be useful in that it's just one side of A4. You print it out, put it by the side of your desktop, and kind of, what a professional trader does is encapsulated under these 5 different headings. So as you put that into practice, you will find that more and more helpful. So the special topic we're looking at today is how to trade quiet markets. Now that has been very, very helpful for last week. I didn't take any trades last week at all, and maybe that's a bit of a clue to the answer how to trade quiet markets. But we'll be covering that during the session today because it's a key skill to really grasp. When markets are very, very quiet, how do you trade in those situations? You can easily give back your profits that you've made during those quiet sessions. So I'll be just talking through some of the strategies that you can use in the quiet markets. Handout for session, we've already covered that. It's on the right hand side, workshop guide November 26. Just click on that and it should appear. Any topics that you would like to covered here, just have a look at sending me an email to giles.coughlan@hycm.com. So if there's anything you really want to look at, just pop it on there. And don't forget, we have the question and answer session during this workshop as well. So you can always ask questions too as we go along. So don't be shy and do use that. Certainly don't be confused or misunderstanding something as we go along. Okay, so without further ado, let's get stuck in. So the first thing I wanted to look at was some news that broke this morning. You can see November the 26th. This is just a little screenshot of my Squawk service, and the news broke at 8 a.m. Some UK election polls. Now, for those of you who've been following the newsletter and some of the comments that I've been making across HYCM social media platforms, I've been reminding traders a number of times that the pound is currently being moved by the UK election polls. And the reason for this is very, very simple. As long as the Conservative Party have a majority, that's going to be supportive of the pound. And that is what has been supporting the pound, because as long as the Conservative have the majority, that means Boris Johnson's Brexit withdrawal agreement plan is more likely to get passed through Parliament. So in other words, a no-deal Brexit is a lot less likely. So when the Conservatives are in the lead, we're seeing the pound being bid. And obviously, we're looking at changes. So you can see today, look, according to the Kantar poll, Labour gained +5 percentage points, whereas the Conservatives lost 2 percentage points. So there was this 43%, 32%. So in other words, the Conservative government's lead has narrowed. Okay, now this has moved the pound from 8 a.m. this morning. It was expected, anticipated, very, in one sense, a very straightforward, predictable move. And the reason that predictability came is because we knew the context. We know the pound's being moved on poll data. So seeing the Conservative majority lead shrink has been a very key signal. So just to be aware of that, pound being moved on poll data. And just to show that, I wanted to just point this out to you as I was preparing this, to show you the pound US dollar chart from the poll announcement. Remember, the announcement is here 8 o'clock GMT time, and here we have the poll released at 8 o'clock GMT. You can see price at the end of that minute got down to about 1.2878, and I was seeing price when it was about 1.2880, and then price moved down steadily from that release. And you can see when price is coming back up into that area, the pound has sold off, and sold off down about just shy of 1.2850. So seeing like a sort of 30-point move on that data release, and the pound is still pressured, and that's why. So okay, so we have that bias. So we can see obviously that one of our weak currencies for today is the pound. And on the HYCM channel, I was flagging that up, and to a group that took place at an event in Dubai, I was showing the currency pair that I was looking at, and we will cover that in a moment, and I'll show you the trade that I'm in on the back of this data and some other data. But the key thing to be aware of, and this is always the case with trading, and it's one of the reasons why I always have to do the disclaimer at the part of the webinar, and that's because circumstances in trading change constantly. Okay, what can be a great trade at 1 o'clock today can be a terrible trade at 1:30, because new news comes out, there's a data shift, there's something that was previously unknown becomes known, and previous trades and outlooks become obsolete or irrelevant. So that's one of the reasons why you have to learn in trading how to interpret the news, rather than just listening to someone's signal, or you're taking a signal that someone suggests, because what happens in an hour's time when the situation has changed but they're not around to tell you, and you're not able to recognize it. So I say that to say this pound is falling on the latest poll data showing a Conservative lead dropped. Now if there's another poll that comes out tomorrow or tonight, and it suddenly says the Conservative majority lead has grown, then that pound weakness will be reversed, and all of a sudden we will see pound strength coming back into the market. So that's something to be very, very aware of. Okay, and with all the currency, strong and weak currency pairs that I put up on the HYCM trading Telegram channel, I always say risks to this outlook. In other words, what will change this outlook? What will make that strong currency become weak? Okay, so always look at that. So the pound, we know, is weakening on the latest poll data. So be aware, if there's the latest poll data that comes out that contradicts the previous poll data. The market wants what's fresh, it wants what's new, and it will focus in on that. A couple of things, if someone could just type in the question panel, I'll send you a couple of links to the latest polls. And if someone just types in hi or something in the question panel, then I can send these links to everyone. If one of you guys could do that, that would be great. Just wait for someone to put a question in. Annoyingly, I can't just send a message to you all. I have to reply to a question. So that's why I'm waiting. If someone's around just to type in a question, that would be great. Okay, I'll give it a minute, or else I'll have to just move on. I think I'm going to have to move on, guys. If anyone, I hope you can hear me okay. So this is making me a little bit worried. Let's just see what I'm sharing. Yeah, the main screen is shared. Am I coming out okay? Can you hear me okay, everybody? Okay, well, I can't send this to you directly unless I get a question. Yue, great, thank you, lovely. I have a, right now I will send this. Now I can send this to everyone. So that is a poll of polls, and this is the YouGov poll. So do follow the YouGov poll is the poll that I see reported on most. So the YouGov poll I've just sent there now. That's the one I see most reference to. So just to be aware of that. And I wanted to particularly make you aware of the latest poll that's expected. Watch out for this poll called the MRP poll. It's due to be released for the UK tomorrow. Now, this poll is really given a lot of credence by the market because this poll correctly predicted the hung parliament in 2017. So but this was the election model on the 7th of June. This was the poll on the left, and this was the general election results. Okay, so very close. Similarly, this was the seats in Parliament predicted by the YouGov poll on the left-hand side, and this was the seats predicted on the right-hand side. So you put those together, and you can see that it was very close. So it's this poll, the MRP poll. It's due to be released tomorrow at around 10 o'clock. So all pound traders, be aware of that. If you're looking, say you're thinking, well, you know, maybe I don't have access to a Squawk. If you have access to the Squawk service, turn your Squawk on and your Squawk will update you. If you don't have a Squawk service, I'm typing in a website. This is a good website where you get breaking news, okay? And you will get the news broken to you, forexlive.com, and you know, you get a few minutes after it's released. So, you know, if there's a big shift in the poll data, this is where you'll find out. So be aware of that. Now, there may be subsequent polls released before that, but this one is widely anticipated. So be aware of that if you're trading the pound. Okay, 10 o'clock tomorrow, definite event risk, because the pound is being moved on these election polls. Remember the rationale? Conservative majority in the lead means the Brexit agreement withdrawal plan is going to be accepted, and Britain's going to leave the EU with a withdrawal agreement, which is positive for the pound. If the Conservative government lead, if the Conservative party lead in the polls shrinks, then that's negative for the pound, because then it's more likely that there's a hung parliament, or maybe Labour get in control and the Brexit agreement plan isn't voted on. So that's why the polls are moving it, and that's how they're moving it. Yes, Hashik, it's 10 p.m. GMT. Thank you. Apologies for that. So that's 10 o'clock GMT time. Be aware of, put it in your calendar and be aware of that. So in terms of what's happening today, where are we now with the US-China trade talks? Now, okay, I want to cover now what to do in quiet markets. Last week was a very, very quiet week in the market. And as I said, I didn't take any trades in that kind of environment because there just wasn't any clear catalyst. And essentially what was happening is there was a number of reports on the US-China phase one trade deal that were contradictory. So it was good news, it was bad news, it was good news, it was bad news, and eventually the market just got fed up and just got fatigued, and so the markets really stopped moving around. And in that kind of environment, it's very easy to get stopped out. It's very easy to enter trade you don't really want to be entering in without a clear direction. And so really, during those quiet markets, when there isn't a clear trade, the very best way to handle that is just not to trade. Just stay out of the market. Now, I know that for some people that's unpopular because they think, well, I don't want to miss any market moves. The problem is that when market moves are unpredictable, or when the market is very quiet, you're more likely to get those unpredictable moves, and the market isn't acting in the way it should. And if there isn't a clear fundamental news driver, then you can see that that's a difficulty. Now, some traders might say, well, this is a time where I might trade technical levels. I can understand and I have some sympathy with that viewpoint. Obviously, I'm more a fundamental and a technical trader, so I'm less likely to rely on the technicals. The other aspect which you could do was you could look at trading the Asian session and just taking those very narrow ranges and those narrow moves out of the market. Now, the reason I didn't want to do that was because the reason the market was so low and tepid in its volatility was fatigue over these US-China trade talks. And the last thing I wanted to do was to have a trade on in the Asian session while I'm away from my desk, because everything's just much more unpredictable. So in that kind of environment, I would recommend, when there isn't a clear driver, there isn't a clear sentiment shift, just keep your powder dry. In the long run, you're going to be much better for it because you're just keeping out of the market. And you kind of develop a skill in not trading in a way, because you suddenly you become a bit more picky, and you start to recognize those clearer sentiment moves. So when those sentiment moves do come, you're well placed to take them. So that is the general advice that I give in trading in quiet markets. If in doubt, stay out. And it will do you well. Now, of course, the key principle, what we're trying to do with our trading, is we're looking to pair strong currencies with weak currencies. We want to do it for each session, and because we're wanting to recognize, these diverging outlooks in currency pairs, because that gives us the best chance of identifying currency pairs moving in our desired direction. Okay, so it's all in the handout here. You can turn to the handout and you can looking back, looking forward, looking at the charts, looking at your risk, looking at the outcome of your trade. So we'll start looking at that now. Okay, I'll come to my desk, Asian session. First thing I want to look at is I want to look at the Asian equity markets. Why do traders care about the equity markets? The answer is because equity markets show us risk appetite. Okay, so here you can see that the equity markets were broadly higher. The Nikkei was up 0.35%, the Hang Seng was down 0.29%, the Shanghai was up plus 0.3%, and the S&P 200, the Australian index, was up 0.83%. So broadly higher. Now, the equity market kind of tailed off a little bit towards the end of the session. And when I first came to my desk, it was more optimistic coming from the Asian equity markets. However, that optimism in the market was all based on some good news between US and China trade talks. There was a phone call that's meant to have taken place, and between China and the US, and a number of positive comments were made. And as a result, there was this optimism that was injected into the market. Now, looking obviously at the equity market, it shows us what risk appetite is. Falling equity market equals risk off, rising equity market equals risk on. So now we're going to look at the equity markets now. I'm just going to pull it across to you. Just get into the habit of doing this. Get into the habit of looking at equity markets so you can understand for yourself, what the risk appetite currently is. So that's a quick snapshot right now. Ignore the US markets because they haven't opened quite yet. And looking at the European market, so UK FTSE 100 flat-ish, Euro Stoxx flat, so the DAX is flat, IBEX flat. These are very small moves, 1.3%, 0, 0.10%, very, very, nothing. You really want to take note when it's about 1%. There's a plus 1% that's really want to take notice. So the DAX is flat, IBEX flat. So what's something is the European equity markets are quite flat. So there's a little bit of okay, we're making our mind up, broadly optimistic, because the tone of this market is the broad optimism between US and China phase 1 trade deal. Okay, and just I can see on my squawk here, just 1 o'clock, senior White House official has suddenly said, despite all the drama, a phase 1 deal remains very close, and this person believes the Chinese will come through with significant concessions on intellectual property protection. So that is supportive for risk. So that's important. So we're getting that mood. Now, of course, if news comes out contrary to this positive, we can see that risk market will change. It'll go to risk off. But at the moment, we're mildly risk on. This is the intermarket correlation. Take a snapshot of this. If you want to see risk on market, you look for a lower volatility index. You'd expect stocks to rally, commodities to rise. And the reason commodities rise is because if the market's more optimistic about global growth, you expect to see oil prices increase because oil will be expected to be a demand. You expect to see copper prices rise, iron ore prices rise. So that's why those commodities are, accompany rising stocks. You expect bond yields to rise, and that's risk on market. Okay, risk off is the opposite, and so this is the risk on market. This is broadly what we're seeing. We're broadly seeing some stocks gently rallying to flat. Commodities, we've got crude up 0.5 percentage point, copper is flat, and iron ore is flat, just slightly down. Bond yields, we've got bond yields are falling at the moment. They're the 10-year yields and the 5-year yields, US bonds are falling, and we're in this kind of, the way I would categorize it is like a tentative risk on, and it's going to be driven by any fresh news. So, if we get some more confirmation of the US-China trade negotiation being sorted, that's going to be really good news for those risk-on trades. So that's something to look forward to and to keep your eye on. Okay, so quick snapshot, risk-on markets, what do you expect? You'd expect higher yielding currencies like the Australian dollar, New Zealand dollar, and Canadian dollar to appreciate, and then you expect Japanese yen and Swiss franc to be weak. So that's what we're expecting at the moment. Okay, so that's your kind of rule of thumb. Risk off obviously is the opposite. So looking at this current session, looking at the Asian session, the pair that I identified first thing this morning was the US dollar Japanese yen pair, because I was anticipating a weak Japanese yen, and I was expecting a strong US dollar. Now, the US dollar has been supported by some positive economic data out of the US at the end of last week, and there's just broad US dollar strength in the market. So the strength of the US dollar, weakness of the Japanese yen. So I was looking at US dollar Japanese yen pair. I was expecting, and still am expecting, US dollar Japanese yen pair to be supported. So let's just have a little look at that. So we go to the chart, okay, and we're seeing any pullbacks. You see that spike in the Asian session was over, optimism over the US-China trade negotiations. So I'm expecting support to remain here on the US dollar Japanese yen pair. So where might we expect traders to enter? Well, look, the simplest way to do this is you can look at pivot points, see what pivot points there'll be around. Okay, so a pivot point down here, see that there's a key one here, 1880, 1884, that would be a key place. That also corresponds with the 200 exponential moving average. The simplest way to look at is just look at support, overhead support and resistance. But you can see here, that's that overhead resistance, this overhead resistance support. You can see that was a key support level here. So going forward, I'm still expecting US dollar Japanese yen strength. I would expect again support here, and then going down further, the next support level I'd expect would be a down here. So 1872, 108.90, and then expect stops running right down here, 108.30. And if we get even further down here, I'd expect buyers at 108.50. So they're the key areas that I'd expect buyers: 108.86, 108.70 and above, all those highs there, and then 108.50. So big round number, key support with stops down below the low. So that's what I'd be looking at on that currency pair. Right, now that was the first pair that I looked at, but then the trade that I took, and it's the trade that I'm in now, was the pound Australian dollar. Now, the reason I took this pair was because I liked it technically, and I liked it fundamentally. The Australian dollar. Now, the Australian dollar was strong because there was some news from RBA Governor Lowe, where he said that the threshold for the RBA to use quantitative easing was going to be if interest rates went down to 0.25%. So interest rates for the RBA at the moment are 0.75%. So the market was like optimistic about that, because the market was like, well, okay, that means the RBA is a lot less likely to use quantitative easing. Governor Lowe was, very, quite negative about quantitative easing. He said the jury's out about whether it works. It's quite clear they're not going to be using it for some time. So that's why we saw a spike in the Australian dollar this morning. This was news coming out from the Governor Lowe it was like 9:05, and the speech was released. And that's that move there, okay? See here, 9:05? That was the speech. Yeah, see that candle? That was what happened there. And that was all on that positivity on that situation. Right, now I looked at that as it came out. There wasn't anything for me just to go long on the Australian dollar. It wasn't strong enough for me to just take a long. I looked potentially at a 50% retrace and decided, no, I'm not interested in just trading that. But you can see that strength in the Australian dollar is still there. Of course, the Australian dollar is also strong on optimism over US-China trade. Remember that the Australian dollar is linked closely to the Chinese economy. Around 30% of Australia's GDP comes from trade with China. So if the US and China are getting on well together, that's going to be a boost. Now, we've just had 1:24, 5 minutes ago, we had White House advisor Conway saying that some sticking points remain regarding phase 1 US-China trade discussions. Can't see that hurting the Australian dollar at the moment, just something to be aware of. That's nothing necessarily particularly new, but that's something to be aware of. Okay, so that was by way of saying the strength in the Australian dollar. So Governor Lowe not likely to use the quantitative easing. So, okay, strength in the Australian dollar. Now, we know that the pound was weak because we'd seen very clearly that the poll data had come out at 8 o'clock. Remember, we looked at the poll data here at 8. So by the time let me just quickly refresh ourselves on that poll data. There it is. That was the poll data there. Conservatives 43%, minus 2%, Labour 32%, plus 5% on the Kantar poll conducted November 21st to 25th. So it's the latest poll data, released 26th, and got weak pound. So what was the risk to this outlook? Risk to this outlook, any negative US-China or positive news for Conservative majority. Now, that was the situation. Now, I'll show you I'll just show you, because when I posted it. So then I posted this on the HYCM community group. I posted you can see here, this is just around, is it 9, about 10 o'clock. And I said, where would you expect sellers? Well, you can see here, expecting sellers up at this area, and expecting sellers up at this area, and expecting profit taking down at this area at 1.8924. Okay, so that's what I posted then, just to show you that, that's what I posted. And going back to, where are we? Oh yeah, apologies. Going back to pound Australian dollar. We'll go to the 15-minute chart. So remember, we're expecting sellers at this 1.90 level, okay? So I entered in at, when did I get in? Just looking at my other chart here. I got in at 1.899, so just below 1.90. I just saw the just saw the market moving up here. Went back into that area, thought that's a perfect opportunity to short. Sellers entered in, got my stops right above the high, and the place I'm looking to take profit is these recent lows, because this makes sense to take profit here. You don't want to be waiting to see, is this level going to hold? Is it going to break? No, 1.8924. That's where I'm looking to take my profit. Just a drop down into this area and take my profit. You can see this has been an area of support, and if you go into the daily chart, you can see that, look, that support level, has been important. It's been held here, here, here. So in all likelihood, you'd expect a move to this area to find some profit taking and some support. So if price does go down here, this is where I want to take my profit. So 1.8924. So I'm in from 1 point just below 1.9. So I'm around sort of 40 odd points up, and then looking to take profit at 1.8924. So that's the trade that I'm in. That's the trade I'm looking at, and that's where I'll be taking my profit if it gets there. Obviously, if price moves a little bit further down, I'll be bringing my stop down above these highs as well. I'll trail the stop down as I go. I'm not moving it for now, just because it's because if price does return up to that area, you see, so here's what you can do. If price does bounce from here and turn up into that area, I would expect sellers here. And if I got sellers up here, I'd expect profit taking down here at 1.8960. So anywhere in this kind of region, I'm expecting sellers. And I'm expecting profit takers down here, 1.8924. So that's the rationale. That's the reason for my trade. Now, what will negate this trade? Okay. Now, what will negate this trade is any negative US-China news, because that will result in Australian dollar weakness. So if I suddenly got some really negative US-China news, then I might consider closing the position out. And if I got some really positive news for a conservative majority, then that would result in some pound strength. So they're my risks to this. That's the risks. If I get any negative US-China news or any positive news for a conservative majority, then I don't need to wait for my stop to be hit. So I don't need to go into drawdown. In that situation, I just want to get out of the market as quickly as I can. So that's what I'll be looking for. That's why I got the squawk on, and I'll just be keeping my eyes out on that. Otherwise, just looking to take it off at the 1.8924 level. I hope that's helped. You can see that I'm using that principle that I teach, which is pairing strong currency pairs with a weak currency pair. Keep looking at that principle, combining the fundamentals and the technicals together to get your entries, get your exits, and that's how I trade. We're looking now at what trades you're looking at. So if there's any trades you guys are looking at, anything that you're thinking of, why don't you have a pop it in the question panel now, because it gives you opportunity for you to talk about it, and for me to just give you any comments that might be helpful for you. So have a look what you're looking at. I mean, just as I'm waiting for you guys to put some comments in or questions, the thing to be aware of is this is the first trade I've taken. I was traveling the week before, so this is like the first trade I've taken in about 2 weeks. Now, the reason before, I got the flu and I was ill, so I just wasn't able to be at my desk, and I wasn't able to be doing my normal work. But last week I was up and around. There just wasn't anything on. So this is the first trade I've taken, and it jumps out. It's just this is a trade that jumps out at you. The technicals are there, the fundamentals are there. This is a trade to take. This is the kind of way you want to trade. You want to trade when you see setups jump out. The technicals, the fundamentals, it all comes together. You're not thinking, is this right, is this wrong? You've got a high conviction level, and that comes in time. Okay, I can understand. If anyone hasn't gotten a trade at the moment, I understand that it's there isn't a lot gone on, and if you've missed those pound moves down, you can always join them if they retrace backwards. So I would expect, if the pound retraces, I expect sellers again, as long as nothing changes on the latest poll data. So that's something to be aware of. The other thing to be aware of is shifts in sentiment. So if we got like negative US-China trade news, then we could expect a sudden risk off move, and then we'd expect Australian dollar, New Zealand dollar weakness, Japanese yen, Swiss franc strength. So one thing to be aware of is sentiment shifts. You can follow those sentiment shifts quite easily. You can either get a paid Squawk service like Rand Squawk, or you can go to forexlive.com and follow along there for free, and you'll start to understand how these sentiment shifts move the market. That's something to be aware of. Looking at the charts, we've looked at the charts. Don't forget your risk. Remember to use your risk carefully. So in my trade, I'm not using any leverage on my account, and that account is without leverage. So it's very simple, very straightforward. I'm not getting into lots of leverage, and that's how I recommend people to trade. Okay, yeah, great. So we have some suggestions. So let's look at US dollar, Canadian dollar pair. Thank you, Sheik. And we'll look at pound yen, Salvatore. Okay, so. Okay, so we've got, with the Canadian dollar, we've got to quickly remind ourselves where we're at with the Canadian dollar. And the baseline we're at with the Canadian dollar is, at their last meeting, the Bank of Canada said that they were like concerned about global trade uncertainty, that trade tensions were restraining business investment. So they were a little bit negative towards the Canadian dollar. That's why we've seen some Canadian dollar weakness. However, recently, Governor Pollock's last week, he said, oh, maybe things are a little bit better. We're quite happy with where the Canadian economy is. So the chances of a rate cut now are down to down to about 30% probability of a 25 basis rate cut in March, and a 60% probability of a rate cut by September. So it's a slightly more bearish outlook has come in for the Canadian dollar. That's why we're seeing the US dollar appreciate against the Canadian dollar. There's been some good positive US economic data out recently. So looking ahead, what we've got with this currency pair is it's tricky to call at the moment. But the event that we can see that could move it is we've got US data. Oh, my computer's frozen. If you go to the Forex Factory calendar, what you'll see is we have. Let Let me show you. We have positive, we have economic data out for the US, and for Canada we have third quarter GDP data. So if we keep getting positive US data, then that's going to be good for the US dollar. So we've got consumer confidence out at 3 o'clock GMT. That's one to look for, and the Canadian dollar data out is on Friday. So that's what I'll be looking at there. And for me, I'm really looking for Friday's data for the US dollar, Canadian dollar. And if we get some like really strong data out of GDP, then I'd expect to see some US dollar CAD downside. If it's weak data and that bearish outlook carries on for the Bank of Canada, then I would expect to see more US dollar, Canadian dollar upside. So I definitely think, Harshit, there's something to look for there. I'm not in any trades now at the moment on that currency pair, but it's one I'm watching. US data first half of the week, Canadian data back end of the week. Don't forget the US are on holiday on Thursday with Thanksgiving Day, so just be aware of that for the US side of it. Pound yen. Okay, so a pound yen trade. Oh, sorry guys, I've got a freeze on my, I've got too many tabs open, so let's see if I can use a different, right, okay, I can use a different browser. So let's look at pound yen. So let's get the chart. Okay. Right, now here, what we've obviously got the negative moves on the pound, okay, because of the poll data out. However, we've also got negativity on the yen because of the positive risk sentiment. So the pound yen pair at the moment, this for me is not tradable because you've got both of these pairs are weak, okay? So depending on what you're doing, Salvatore, would depend how you approach this. From an intraday perspective, for me, there's nothing here intraday. However, for a swing trade perspective, you could say, look, okay, I've got the view that the pound is going to be supported because I think the Conservative government are going to get a majority into December the 12th on the election. So I'm expecting some bullish pound upside. So you might say, if I get some negative polling data out, but I'm still convinced that Conservative majority is going to win, then you might think, well, then that's an opportunity to go long, and you might need, you know, an 800-point stop on. So it depends what you're trying to trade. Intraday trading, look, we've got weak pound because of the poll data and weak yen to the positive risk sentiment. So in other words, this should be range bound, should be just bouncing around, not doing very much in this little range. Longer term, we can see the pound being bid, and it's being bid as the uncertainty about a Brexit withdrawal agreement fades, and there's more chance of a Brexit deal being done. So as long as the Conservative majority are in the lead, I'd expect the pound yen pair to be supported. Hope that helps, Salvatore. Euro US dollar. Again, euro US dollar. Broadly, euro US dollar is down. It has been for weeks. At the moment, what's driving its currency pair is there's been more negative euro data. The outlook for the euro, you know, broadly speaking, the outlook for the euro is a sell on the rallies because the eurozone has been quite weak. But if we get a recovery in US-China trade negotiations, then we might see some, you know, risk on trading. We might see the euro picking up. So there's nothing there for me on the euro, Harshit, at the moment. Nothing that I'm particularly looking at. Okay. Okay, guys, that's all the currencies questions that we've got for today. I hope you're doing well, and watch out for any risk sentiment moves changing in the near term. Take care, and I hope you have a good week. And you're very welcome. Welcome, Kin. Nice to have you. Lovely. Oh, very nice. Kin, are you from HYM Alliance in Malaysia? It's lovely. Yeah, well, lovely to have you, Kin. And I should remember to do something on gold for you guys, because I know you guys are just trading gold. So yeah, let me just do something quickly on gold. Don't forget, one of the nice things about gold is in January, in the last sort of 6 years, gold has been bid. Because of the Chinese Lunar New Year, there's a tradition of giving gold jewelry. So just to be aware, on the gold chart, trading view, in the last 6 years, the last 6 months of January have been positive for gold. So just to be aware of that. There are some negative reasons for gold at the moment, but coming into year end, end of December, just to be aware of that. And, you know, one area of interest, we've obviously got this key support level here, down 1.448. And below that, we've got another key support level, 1426, 1420. So these are 2 levels of support. So going into December, late December and early January, look at these 2 levels of support. There's some fundamental reasons for gold pulling back, but there's some fundamental reasons where gold may be bid as well. So I'll write a piece on it tomorrow at forexlive.com at 7 o'clock GMT. So if you're around, check out forexlive.com, 7 o'clock GMT, or on my LinkedIn page and my Twitter page. I'll put up an article going into a bit more detail about that. That's for you, Kin. Yeah, that's great, Kin. You have a look at that. Forexlive.com at 7 o'clock GMT. I'll do a post, okay? And I've taken that to you all, to send that to you all and have a look. Okay, now guys, you take care. Have a very good rest of session, and I look forward to seeing you guys next Monday. Take care now. Goodbye.